In this video, I'm going to show you how to choose the high probability supply and demand zones. In the chart, you can clearly see supply and demand zones everywhere, but that doesn't mean like every candle will work or every zone will work. So it doesn't mean it that way. So in this video, I want to touch on those level of demand and supply so that we can choose the one that is more effective, better than the other one. So from this example here, we will start from this example, the first one here. We can clearly see that we have a demand zone here, and on the other side we have a demand zone here. They are all the same but different in a way. As you can see, we have a zone. We change this color here so that this thing can be. The only difference with these two is because the first one, it does not break the previous low here. So meaning this candle here is more important, better than this one, and also this one is very important too. But what we need to see, the candle that create the zone, this candle here, it must break this low here, because there will be some orders at this low. So the market must tap the low here before moving higher. This one here is the most effective demand zone. The same goes to the supply zone. So we can clearly see that this one here tapped the low, but this one did not. So if you find this one here, you can use it, but in the lower time frame, when you need to make an entry, consider this one the most. This one will be the most important one because your entry will not be stopped out easily. But if you use this one in the higher time frame and tend to use it in the lower time frame too for entry, you are most likely to be stopped out because there might be another zone below here. So keep in mind for this kind of things when choosing the correct supply and demand zone. And sometimes when you need to choose a zone, you have to consider the gap in between. As you can see, we have a space here between this candle and between this candle here. You see this space here, the market is more likely to come and fill it up and then move higher. So please also consider this kind of spaces in the market, and you can also call them fair value gaps, FOV, fair value gaps or something like that. So in this case, we just do something like this. So always consider taking, you can also consider taking this one only, because this one you have to use it when you have more experience for this kind of smart money concepts. So let's move on to a real chart so that I can show you what I really mean.
In our backtesting, we use Trader Edge, a dynamic backtesting software that revolutionizes strategy management. This platform excels in consolidating all your strategies in one place, saving you both time and money, while providing clarity on which strategy suits the current market conditions. With features like date tracking, it keeps you motivated and organized, allowing you to monitor your backtesting progress effectively. Trader Edge also offers forward testing capabilities for real-time scenario analysis. To enhance your trading efficiency, find the link in the description below.
So for example purposes, let's do this one here. We have a high that is broken here, and then we have a zone here. Even though the market didn't break this low here, this one is a zone, but as you can see, this candle here, it did not come and break this low. As you can see, it did not come and break this low here. So this one here, you can just avoid it. Look at this one here. It came and broke this low here. As you can see, it has tapped this low, meaning the candle that makes the zone must break the previous low. As you can see from this one here, it breaks the previous low and then shoot higher. So meaning it was triggering the sell orders for those breakout traders and shoot higher, and then it moves higher and then came and retest the zone and continue to move higher. So for instance, as you can see from this example here, the market did not break this high here. This candle did not break this high before shooting low. Okay, I hope you understand this one here. Here is a clear example of demand zone. We have a zone here. We can also say that we have a break of structure around this area here, and also we have some equal highs here. So the market, as you can see, it shoot high and then came down. So the gap that I was talking about, my lines are not straight, guys, sorry about that. And also we can see that we have a space in between that need to be filled. So for this, we can see that we have a candle here. It shoot lower, breaking this low here, and then moved higher, make a new market structure here, and then came down. After making this low here, the market eventually confirmed the entry with this candle. So for you to take this candle entry, obviously the market will come and retest this candle's low. This candle's open, and then you can enter here with a buy limit order, because already the market tapped the zone, and then what you need is just a retracement, and then the market shoot higher. Let's find more examples. This one, it can be a little bit difficult, but let's try to understand it. We have a candle here and another candle here, and as you can see, the momentum from this candle and this one is very huge compared to these two. So meaning, just because we are on the 30 minutes time frame, if we combine these two candles and these two candles, this one will make an engulfing candle other than this one here. So our zone will look something like this. And then what we need to find right now is a low that has been broken before the market made a zone, which is this one here. So meaning, when the market comes to this area here, we will look to buy. And also we can see that we have a market structure that has been broken here. So from this area here, what we need is just to let the market come to the zone and feel this gap is very huge from this area to this area here. So meaning, we will wait for the market to come and touch this level here before giving us an entry. So we will wait for the market to confirm with this candle here. This will be our confirmation candle. This is our confirmation candle. So to enter, we will wait for this candle to close, and then we put our buy limit order here. And then if like you see the market that is already making this, and then it's closing with this engulfing candle here, just check the side, your market structure, and then because the market closed with a bullish engulfing candle, that means your buy limit order will be at this level of area here. And then you put your stop loss below. This one will be risky because we have another low here, but because we want to reduce the risk in the market, we will put it here. We will find another trade in the future. And also, for those who are wondering why am I confirming my trades, because if you are new to watching my videos, if you don't confirm your trade, let's say this is your zone, you'll buy when the market comes to this zone, and you already see that the market just shoot lower without even giving you a signal that this can confirm to go low up. So we need a bullish candle to confirm the entry, like this candle here. Let's look at one last example before we end the video. We have a low here, the market shoot lower and tapped this low here. We have a zone. Let's look at if the zone, the candle that created the zone, did break the previous high. Yes, it did. As you can see from this area here, it tapped this high here, it tapped this high here, and then you can clearly see that we have a market structure that has been broken. So for us to sell this thing here, we need a confirmation candle. You can clearly see that we have some gaps here between this high and this low here. We have a gap here in the market, so we just let the market to come to this area here of supply, and then we just wait for the market to close bearish after touching this. If the market shoot higher without confirming, it will make the whole pattern to be invalidated. So from this area, because the market closed with a candle that is not an engulfing candle, we just put our sell limit order here. And if you want to reduce the risk, I will make another video. You can also put another sell limit order around here, but this one will take time because you'll see that, oh, you missed the trade, is going down and eventually come up to this area here. So for the sake of this video, we just put it here. This will be your entry. When this candle closes, you put your sell limit order around this area here, and then stop loss above, and then your trade will be something like this. Above a little bit for spreads because some brokers are just annoying. So yeah, something like this, 1:5 or something. Yeah, I guess this is the end of our video, guys. I will see you on the next one. So please consider subscribing, like the video, share the video to your friends and families, and leave a comment if you don't understand anything in this video. I will make another video in the future to clarify everything. Okay guys, I will see you on the next one. And before I leave, here is another example. Here is another example here. The market tapped the high before creating the zone, and then it came up close with a bearish candle here, and then dropped lower to even break this low here. This will be a quick trade setup here. Yeah, maybe something like this. You'll enter here, stop loss here, target this area here. And also this one is a confirmation candle. If you want to reduce the risk, you can also enter here. I will just make a video on why I'm saying this one will be our entry area here, because I was doing it for the sake of this video, but I guess I'll see you on the next one with something like this one here. Yo guys, see you on the next one. Also check out some other videos on the channel that will help you a lot. Okay, goodbye.